Greetings, members one and all of the Salivation Nation. Is someone cornering the silver market in order to cause a silver shortage? We shall find out. This article comes to us from Silver Doctors, and it is an opinion piece forwarded to me by Chuck and Plata. So I thought we'd explore it a little bit and see what you think. And as you know, I'm kind of suspicious of articles from websites such as this, just because it seems like there is sort of an agenda that does come through, and you never know what is real or what is exaggerated and the like. But so take it for a grain of salt. But let's explore it. We'll see what's going on here. Comex Rule 589 could be coming soon. I have no idea what that is, but it said here's a rule and why it may be implemented and presented in this well-researched argument claiming there's a physical silver shortage right now. And then it goes on, talks about, this is by Corelli Jubert. In 2017, investments in silver, physical bar, coin purchase, and ETF fell by 40%. In value terms, annual identifiable investment was worth $2.6 billion for the whole year. And in the first 6 months of 2018, investments just in silver physical bars jumped to $27.3 billion. In such a small market, it's explosive information. It's an explosive information. The silver price is still under $16 a day, but it won't last long at that level. With an open interest around 1 billion ounces in the Comex, there will be a huge short squeeze before the end of the year. Remember the rule for silver as for gold. If you don't hold it, you don't own it. Certainly we can all agree with that. And they say that someone is cornering the market, and underground reserves of silver show that they look at took over their 510,000 tons of the known total silver reserves from 2010, from which I subtracted production year after year. So there's the year and the reserves and the mine production and the rest there that show the production there for each year. And it's kind of gone down. It topped out. It was, in 2015 there. So total of 202,500 tons. More or less, there are 307,500 tons left in underground silver reserves. At the current price of mining, this represents just 12 years of production. Mining production has increased in recent years, despite the continuing decline in silver content in mined ores, both in pure silver mines, but also with lower grades in copper, lead, and zinc mines, where silver is a byproduct, 70% of the silver production. And I'd be curious to know how they get that number, how much is left in underground silver reserves, what they guesstimate based off of geology and science. Now, we know that in the recent article I posted about the Mexican mine that is producing high-grade silver mines, and their production has greatly increased. Nevertheless, for more than 50 years, silver demand has been stronger than supply, and the silver market is in an almost permanent deficit. See the red line in the table underneath. We see there the physical silver deficit. I don't know why the table was grayed out like this, but nonetheless, there it is. We see there's a deficit there every year. Now, 2007, that deficit has decreased substantially, especially compared to 2015. It's hard to see here, but it was at negative 121.3 in 2015, and now it's at negative 26 in the supply and the physical deficit there. 2012, it was more. Is in the black there. In 1965, President Johnson decided to stop using silver coins, and so we see the speech there is talking about it. And I'm not going to read that, but we'll see. And move ahead to the World Silver Survey. It says there are 86,651 tons of silver in above ground stocks there, and we see the disbursement thereof of the custodian vault stocks of silver. And we can see, surprisingly, that it's lower in North America than anywhere else. In Europe, that's interesting. If that's right, 50% in Asia. At the end of 2017, 13,059 tons were in private vaults purchased by investors waiting for a big rise in the prices of silver. Then we have silver and ETFs there. The stocks in different Occidental ETFs are about 669 million ounces of silver bought on behalf of investors. And then we can see all the different ones there. SLV there. Look at the amount in SLVs. It takes up the majority of this chart there. And then there's the silver price and reflection through the ages as it moved in since the beginning of the ETFs. SLV and the different securities there. After the Washington G20 in November 2008 and the willingness expressed by the concert of nations to change the monetary system, Chinese banks had offered their customers to keep their cash in either yuan or gold or silver via ETFs. That means that every Chinese bank has a stock of gold and silver. Unlike the West, these Chinese ETFs are officially supervised by the Chinese Central Bank. China is therefore well established a reserve of silver, but whose exact weight is not revealed. And also the thing about China, and I know Small Gold has mentioned this, is how much can we really trust with because they manipulate their currency, and there's other things that the Chinese do that, the government and also some of the people with the counterfeiting of many gold and silver items out there. LBMA had promised last year to publish gold and silver stocks the first day of each month. The last time they did it was in March 2018. At that time, in their warehouses, there was 33,786 tons of silver. This includes SLV silver stock for 9,000 tons. So there are only about 24,781 tons of silver to sell in the LBMA warehouses in March 2018. Comex, in their warehouses, there are 203 million ounces that are eligible not for sale and 72.9 million ounces registered for sale at the price defined by the seller. The listed inventory represents 275 million ounces, which include JP Morgan's 133 million ounces, which could be intended for the U.S. Treasury and perhaps be restituted from a lease to China in fine. So there we go. As we see the chart there in JP Morgan's holdings, they've accumulated quite a lot. This is before the JPM vault back in April 2011. And the Comex, traditionally, there are very few silver deliveries, and unsurprisingly, not so surprising to hear that. And between 2012 and 2018, JPM Bank has accumulated 133 million ounces in 6 years, or 22.2 million ounces per year. This represents 31.4% of Comex deliveries. The Comex, therefore, delivers only 47.8 million ounces per year, or 23.9 million ounces per semester. So here's where we get to the cornering of the silver market. Since the beginning of 2018, the Comex has transmitted to London its delivery obligations in the form of the new EPP. In just 7 months, these EFP accounted for 1,820 million ounces, or 51,596 tons of silver. These delivery requests in the first half of 2018 represent 45 times the semi-annual normal at the Comex, or 69 times the normal without the JPM stack. In 2017, silver mine production had been less than 22,500 tons. These delivery requests represent more than twice the 2017 production, and it concentrated in only 7 months. If this continues at the end of the year, there will be delivery requests for 4 years of production. I'm kind of hard to follow that. In 2017, silver mine production had been less than 22,500 tons. These delivery requests represent more than twice the 2017 production. I think that may be supposed to be 2018, that first sentence. All these are kind of just blurbs of things. That's one reason why some of these sites, it's kind of difficult to really follow. If there are only 24,781 tons of silver to sell in the LBMA warehouses, how could they deliver 51,596 tons? Yeah, that's a good question, if the numbers are right. 26,815 tons are missing. That represents more than a year of mine production. The silver chart says that the triangle will be close to October 2018, but the rise should start in September. The previous silver corners, in the early 1970s, the Hunt brothers, who had made their fortunes in oil, panicked at the sight of galloping inflation. Since the Federal Reserve had abandoned the defense of the fixed price of gold in dollars, as in the United States it was forbidden to hold more than a certain amount of gold, they decided to heavily invest in silver. When they started, and 1 ounce of silver was worth $1.3 dollars on the last day of the hike in January 1980, the silver reached $50 before the Hunt brothers were crushed by the Fed. What is surprising us is that the Hunt brothers and their associates in the Emirates had only amassed about 100 million ounces of physical silver. Besides that, they had bought all the future contracts in the market, which they had to sell with huge losses because of margin calls. In October 2009, China banned the export of silver, depriving the markets of approximately 154 million ounces, blocking JPM in a short squeeze by not delivering the silver sold by China through Bear Stearns. This caused the prices to skyrocket in 2010, 2011. The silver price climbed from $14.67 to $49 in May 2011. The CME changed the rules to crash the speculators with 5 successive margin calls, exactly like 1980. In the beginning of 2009, when the silver was $14.67, the whole silver market was worth about $13 billion. So in 2018, between January and July, the smart money asked delivery of 1,820 million ounces, and they bought $29 billion. They started buying all the physical silver available to the market. When the second circle of insiders will be informed of this extraordinary opportunity, there will be a rush of new investors who will take advantage of the windfall. Billions of dollars will be invested in a very small market. And here we go. On July 6th, Andrew Maguire confirmed this move on the smart money on KWM, King World News. We're also evidencing a large move to allocate and remove gold and silver from the interconnected legacy banking system. This is creating a supply shortage ahead of season, and this is where everything falls apart for this article. They began sourcing King World News, which is a discredited source, and Andrew Maguire. That's why I kind of stay away from these articles. But it's interesting to see how they get to, and it's just really kind of hard to follow. But I'm inclined not to believe any of this at all. And I know they're sourcing some of the stuff like that, but they haven't really gotten to it. But since January 2018, so they're blurring a bunch of facts here. Let's get to the analysis point of this. In the history of humanity, gold and silver have always been monetary references. And by the way, poorly written. I guess this guy's or girl or whoever it is French and doesn't know the English language exactly well, but it's not very well written either. Gold and silver ratios have fluctuated from one continent from one another from one era to another. When European mines were exhausted in the late 15th and 16th century, gold and silver ratio was 1/10, and Europe 1 to 10. And Europe against 1 to 5 in China. The bimetallic monetary system set up by the French Convention in 1795 set a ratio 15 to 5. Okay, that's not an analysis. That's just stating more facts about the ratio. All figures produced by the USGS are false, so they just blatantly just disregard trusted resources. I include the ratio has been for decades of a political will. Well, there's a lot of things that play into the gold to silver ratios of where that is. The political will has been reflected by these coins hit by the U.S. Mint in 2007 and 2008 has been revealed by whistleblower to the net community. I'm not sure what they mean by that. And it talks about the Ameros and everything. This article was very tough to really follow. What price for silver? The rise of silver can be slow to very brutal. The slow rise to already be surprisingly fast. I don't get this. You're seeing my real-time reaction to this. Yeah. Now I know why I don't really pay much attention to silver doctors. Sorry, Chuck and Plata. This does not make sense to me. You've lost me. This has lost me. A rise will go faster is what they're speculating here. And I don't see any evidence of a cornering of the market. I know there's some talk about how this one thing with the numbers or whatever, selling more than what's there. But anyways. So there you have it, people. Read what you think about see what you think about this, about the cornering of the market. But this does not make a whole lot of sense to me. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, comment, and subscribe.